All right, investors. Today, let's try to analyze Google shares. And after watching this video, you will be able to tell what's Google shares target price, whether it's undervalued or overvalued. And also, we will look at its closest peers and see if Google is a better share among its closest peers. And we will analyze Google shares from the technical side as well, and you will be able to tell what could be the sell price, the stop loss and the take profit. So let's start our analysis. The reason why I decided to analyze the share is that Google looks very strong fundamentally. It has very strong fundamental midterm support. And moreover, recently it posted its earnings. Yesterday it posted its earnings, which were 12 per share, better than analysts expected of 1.84 per share, as you can see over here. And now let's analyze Google shares so that you can tell whether it's worth buying this share now and what its growth potential. So first thing we're gonna do, we already have this Google Sheets prepared. If you didn't know how to build it, you can watch previous videos. I will put the link in the description. Again, we will be using Google Sheets and financial modeling prep data point. You need to connect it via extension, and I will put the link to the detailed instructions of how you can connect FMP data points with Google Sheets. So first of all, you need to input the stock ticker over here. In case of Google or Alphabet shares, it's GOOGL. And now it is calculating the ratios. Now we are comparing the whether it's using its capital efficiently. WACC, it's a weighted average cost of capital. Basically, it's a cost on its attracted funds. And ROIC, it's a return on invested capital. It's a return on its attracted funds, both debt funds and own funds, including equities. And as you can see, ROIC to WACC ratio is 286, which means that Google is using its attracted funds very, very efficient. You can also see the stock target price assigned by different investment analysts. As usual, you should pay attention to the most recent stock target price calculations. We have 4 here, and the adjusted target price is, as you can see over here. So the analysts are pretty positive about the share price, and you can see the investment bank that was initiating the stock target price calculation, as well as the analyst names that were calculating the stock target price. And you can also see the consensus stock target price, that's the average stock target price among all the analysts, but you can take the consensus target price from here, from the last calculations. This would be more relevant, as we can see the average is 204, so you can say that the consensus target price based on most recent updates is 204. Now what you can do, you can compare the stock with the closest peer. For that you can use the financial modeling prep API endpoint. I will put the link on how to obtain it. First you need to obtain your custom API key, and then you will be able to use it. Just input your custom API key where it says API key equals, and then you can input in the browser. Here in the name you can input the Google ticker, which is GOOGL. And now you'll be able to see Google's closest competitors. You see the Snapchat, you see the Twilio, you see the Meta, and you can just compare it one by one to see which one has the highest ROIC to WACC ratio. For example, you can put the Meta ticker over here and see what's its ROIC to WACC ratio, and you should choose company with the highest. As you can see, Meta has the highest WACC to ROIC ratio. Also, you should consider taking average number of the target price and seeing what its gross potential. For example, Meta has average 637.5, and you should see, compare it to the current market price, and that's how you can calculate the gross potential of the Meta shares and Google shares and see if Google shares has higher gross potential. Now you can also take another competitor. Let's say you can take the Snapchat. It was also reporting. You can input it over here and see if it's using its capital more efficiently than the Google. And as you can see, it has a negative ROIC to WACC because it has a negative return on invested capital. As you can see here, return TTM stands for trailing 12 months. And that's how you can compare them and choose the stock with the highest ROIC to WACC ratio and highest growth potential. The stock which target price exceeds its market price uh, by at least maybe 15-20%. I usually choose stocks which target price exceeds at least 20%. That's the good indication of the strong fundamentals for me. But not only that, you should also pay attention to other financial ratios. I'll put the link to the description down to this video on the article devoted to financial ratios which you should pay attention to in order to undertake express fundamental analysis. Okay, the next step would be to calculate the Google stock target price. As you know, there are three valuation models. It's a DCF, DDM, and price income model. We'll be using the last one, thinks it's the easiest model. But if you're interested in calculating using the DCF valuation model, that's discounted cash flow, I'll put the link to the article down to this video. This is the step-by-step article on how you can calculate it in Excel, or you can also calculate it in Google Sheets. That's very easy step-by-step guidance, and if you're interested, you will be able to read it. Also, I have the article on DDM valuation model. We'll also put it into the description. But now, since I don't want to take a lot of time from you, we will be using the price income model. Simply input the stock ticker over here. In our case, it's a Google, and as you can see, the financial modeling prep is already recalculating, extracting data for you. As you can see, there are a lot of financial ratios, and I've taken important financial ratios that I consider important. You can also change this list, put more ratios. The more ratios you put, the higher the accuracy of this model will be. And also you can put the custom financial ratios that best reflect the company's business. But in our case, I'm taking the standard ratios. Also, you should take the closest peers. We've already seen what are the closest peers. Let's simply copy the stock tickers to our table. And as you can see, it is already recalculating everything. Again, I have a separate video and articles of how to build this simple table. I'll also put the link down to the description of this video. And let me finish with the closest competitors. And yeah, of course, let's take Meta. And here you go, we have financial ratios, and this is basically the average of all the ratios that it's extracting. Then we are assigning the weights. In this case, I'm assigning equal weights because I think that each ratio represents the equal importance for me. But again, if you think that return on equity, for example, or enterprise value to sales represents higher value to you, then you should put larger weight here and then smaller weight to other ratios, because the sum of all those ratios should be equal to 1 or 100%, as in my case. Then I am basically recalculating everything to come up to individual coefficients, then sum those coefficients up. This is the very simple formula. And then I extract the last share price of Google share, which is 179. And that's how I calculate the stock target price, which is 211% growth potential. That's very, very good growth potential, 560. Again, we have already seen that the average consensus price based on the most recent analyst estimations is 204, and now you have your 560, and again you can extract the average from these two numbers. The average would be 381, and you can say that the average based on your price income model and based on analyst estimations is 381. But again, this is very simple model. Of course, you can take DCF model. You can also examine those ratios individually and substitute them, put other ratios if you want to. For example, return on equity, in this case, it's higher than of closest peers. You can substitute it so that the ratio will reflect the situation with the closest peers better. Also, return on invested capital, this is 0.25, but as you can see, the average among competitors is 0.06, so it's very low, and Google is better in this sense. That's why it is assigning the higher coefficient to in here and the higher growth potential. So based on the current stock price, Google has amazing growth potential based on the simple model, and based on the average analyst estimates, it's around 300. So you can say that plus or minus 300 would be the target price for Google shares, which implies very good growth potential for Google stock. But again, this is very simple model. Of course, you can undertake DCF valuation model, which takes more assumption, but would be more accurate model. And just in case if company, maybe you're not considering Google, other stocks, other companies, if they are paying regularly dividends, then you can take the DDM valuation model. That's the dividend discount model. I have the article, you can read it and you can also apply it. This is more accurate model, but only applies to stocks that are paying dividends. The next step would be to calculate the stock sell points. That's the stop loss, the point at which you sell with loss, and take profit, the point at which you sell with the profit. For that, we're going to be using the TradingView website. But of course, if you have your trade terminal, you can use your trade terminal for undertaking this technical analysis, drawing your graphs. For example, I'm using the interactive brokers. You can use the Saxo Bank, you can name it. There are a lot of trading terminals. But for this example, just to make it simple, I'm using the TradingView. Just input the Google share over here. We are launching the chart. This is a one-day chart, so each candle represents the 1 day. As you can see, the maximum price at which it was trading this year is 191, still too far from the current levels. And now we can calculate the stock's stop loss and take profit using very simple Chrome extension. Oh, I'm sorry, I need 1 second to transfer this. The thing is that I'm opening Safari, but this extension only works with Chrome. I need to open the TradingView. Yeah, here we go. That's my another screen. Yeah, so basically input the stock ticker Google once again, launching the chart. And now you have the simple extension. I'll put the link to the description of this video. It's called Stock Analyzer. What you should do, you should input your custom API key that you obtain. Here is the instructions. Simply press here, get your custom API key, and you're good to go. This is the financial modeling prep API key. And once you input your custom API key, simply input the stock ticker. In our case, it's a Google shares, and press the calculate button. As you can see, it is calculating the stock target price based on very conservative DCF model. DCF model with very conservative assumptions. It is giving 163, which implies the fair valuation. But based on our another model, price income model, it has a good growth potential, and also based on average consensus analyst estimates, it also has the growth potential. And you can take the average like 163, our calculated 400, and average analyst 204, extract the average number and say that it's your consensus stock target price of the Google share. Now we are looking at the stop loss level and take profit level. Stop loss at which you're gonna sell with loss. So let's say you're buying at the current level of 163 and you don't want to be additional losses. You're gonna sell with loss as soon as stock starts declining. And the take profit, you're taking the profit as soon as the stock gains some percentage. So now let's draw it in on our graph in the TradingView. Take profit 175, but of course you can round this number to more beautiful numbers, say 175, because larger institutional players are usually closing at very round, very beautiful numbers. So you should round it up. If you see 175.85, you should round it to 175. And also with the stop loss level 175, it's a good idea to round it to 160 or even 165. So in this case, let's round it up to 160 and 175. So 160 and 175. approximately somewhere over here. And also it would be a good idea to see the support and resistance level. In case of the Google shares, we have the support level very close to in here 163. That's what our extension told us, 165 where we should put, but we decided to put at 160 because it is more rounded number, very looks beautiful, and it was slightly far from our purchase price. But let's listen for the extension and put at 170.65. As you can see, it's close to the resistance level. It was very strong resistance level because when the price was approaching this line, you see the volumes were increasing, and now when it broke this resistance level, it became the support level. And now you should wait when, if the stock is breaking this support level downwards, you should sell the stock probably at round number 165. This would be your take profit level. Stop loss level, I'm sorry. And for the take profit, you should also compare it to the resistance and support levels. As you can see in the past, here was very strong resistance level because stock was rising upwards, and then it started trading in a flat trajectory over here. And as you can see, as soon as it was approaching this line, the volumes were also skyrocketing, were increasing. So this was very strong resistance level, which later became the support level. And now you can see that 175.24, it's the level of the resistance. So if the stock will gain up till this point, there is a high probability that will start falling because there may be a larger seller at this level. So from the current level, let's say if you're buying at the current price 169, and if you wait till the 175, it implies only 3.45% the gross potential, technically speaking. But fundamentally speaking, we have already seen that it can overpass this 190 and park somewhere near 204. So fundamentally, if you are holding it for a midterm or for a longer term, you should listen for this number, like apply this number. But if you're holding this stock intraday or short term, 175, it's the point at which you can sell. At least it's what our extension is telling us. So thank you very much for watching this video. You already know that Google share is very strong fundamentally. It's using its capital efficiently, and the analyst assigned good target price for the share, and it has very good growth potential. By the way, let's calculate it. For example, you're buying at the current level and you're selling at 204. If you sell at 204, it implies the 20% growth potential. It's even more if we rely on our price income model, and it implies fiat valuation if you use the model that DCF model that extension was calculating upon. But 204, I think that would be a good indication that applies a 20% growth potential on the midterm and around 3-4% growth potential more on the shorter term. But I think that Google is a great share. It's one of the few shares among Magnificent Seven. I would say it's the only share among Magnificent Seven currently that looks undervalued, and given high numbers during their financial report that they beat analyst estimates, this will draw even more attention from the retail investors, retail traders, and other institutionals, and this can drive its price upwards even more aggressively. So I think it can reach this 200 level within even this year. So I would not be selling. If I buy this stock, I will not be trading it short term. At least I would hold it for 6 months or even more, because fundamentally it looks very strong. So thank you very much for watching my express guidance. I hope you'll find it useful. Please subscribe to my Twitter or X, formerly Twitter. Thank you very much.